My favorite stocks to buy December 2020. Welcome back to the channel. It's me, Adam. You're watching Steady Invest. We're going to get started. Before I do, smash that like button. If you're new to the channel, welcome aboard. Hit that subscribe button and let's get started. All right, number one, we have Facebook stock. All right, and I know this one has run up a little bit in the last few weeks. That being said, though, Facebook is an absolute monster of a stock. It's one of the big tech FANG stocks, as we all know. And Facebook is just one of those unstoppable forces in the stock market that I'm comfortable holding them as one of my biggest positions, and I'm even willing to add more even at these prices. As we know, they own WhatsApp, Instagram, Facebook Messenger, and I use those apps every single day. They have $5 billion in cash, $146 billion in assets, and they only have about $29 billion in liabilities. And to be able to say that $28 billion in liabilities isn't that much relative to the amount of assets that they have says a lot about the company. Not to mention they have no long-term debt. Meanwhile, they're making $1 billion acquisitions and we're not even talking about it. And they're only at an $816 billion market cap. And I know I'm saying only $816 billion, but relative to the other FANG stocks, Apple's valuation is over $2 trillion, Microsoft $1.63 trillion, Google $1.22 trillion, and Amazon $1.62 trillion. $800 billion, psh, nothing. And one last thing I want to mention about Facebook is their tremendous room for growth when it comes to e-commerce. Facebook Marketplace is turning out to be an amazing tool. Even more so than that, you can see them using Instagram to push their e-commerce sales as well. See a shirt you like on Instagram, just push the buy button. Now, because I am happy with my position, I'm not necessarily buying right now, but if we do see a dip, I will definitely look into buying some more. But again, for me, this is a long-term investment, time in the market versus timing the market. All right, next up, we have a dividend value company, Algonquin Power and Utilities, ticker symbol AQN, and they trade on the New York Stock Exchange and Toronto Stock Exchange. And I made a dedicated video about them last week, which I'll link below, but I just like the prospects of this company. And they are a Canadian renewable energy company. Considering this is a very steady stock, we've seen a little bit of a run-up over the last couple of months, and we reached a peak of about 21.39 Canadian, and just last week we had a low of about $20. So I do like the value right now considering where we've been trading for the last couple of months. We're at a $12 billion market cap, and considering where the world is moving with renewable energy, I really like the prospects of this company. And they have a strong balance sheet as well. Their assets at the end of last year totaled about $11 billion, with liabilities at about $6.5 billion. All right, next up we have Hyliion, ticker symbol HYLN, and they're an electric vehicle company that make trucks, and they're targeting commercial markets. One of their main products is they replace the powertrain in existing gasoline trucks, and they put in one of their own, creating a hybrid diesel truck. So think of all the retailers out there with their trucks and how much money Hyliion can save them from not having to buy new trucks. Their other main product, the ERX, it uses renewable gas. It's strong, efficient, and affordable. And if Hyliion can deliver, they'll own a huge portion of the trucking market share. So for those that don't know, this was a SPAC back in the summer. And then right after the company merged, for one straight month, we just saw continual downtrends. So we hit a low here of about just under $19. And over here, we have a solid support around the same level. And right now, we're back at there again. So if you do believe in the story behind Hyliion, this wouldn't be a bad entry point in my opinion. And as a trade, I like these prices as well. This is a speculative company. They still are in their infancy. Nothing's guaranteed. But if they are successful, they'll be a huge hit. All right, next up we have Virgin Galactic, ticker symbol SPCE. It trades on the New York Stock Exchange. And I just made a video about this yesterday. Check my link below. I'll add it in the description. And this is a company that's currently moving on news. And right now, we're just waiting for the test flights to move forward, but we can't because of the pandemic. I won't go in depth again. Check out my video from yesterday. All right, next up we have TDOC, ticker symbol TDOC. It trades on the New York Stock Exchange, and we can see a huge run up this year, obviously no surprise. And they are a telemedicine and virtual healthcare company, and no surprise this year we saw a huge run up. They're valued at just over $28 billion, and we've been trading sideways for about 6 months now. And recently, ARK K and ARK W have been buying a lot of this stock. We see in ARK K, it makes up about almost 4%, and in ARK W, just over 3%. So the long-term opportunity is clear, but the short-term is less certain. Most medical care requires in-person visits, but estimates are that about 20% of office visits could be virtualized. That amounts to a $250 billion opportunity. And TDOC is one of the leaders in this market. Not to mention they merged with Livongo just recently, creating a huge opportunity. And Livongo was a company that specialized in remote coaching for diabetes. I like this as an investment, but in the short term, anything can happen. Especially with any vaccine news could bring the stock lower. The closer the stock gets to 170, the more attractive it is to buy. All right, next up we have HUYA, ticker symbol HUYA. It trades on the New York Stock Exchange, and this one's a really interesting stock. They're a Chinese video game streaming service, and in my opinion, there's so much to like about the stock from a risk-reward standpoint. They're currently valued just under $5 billion. They're profitable. They're backed by one of the mammoth companies in the world, Tencent Holdings. It's a huge addressable market, and they're merging with their biggest competitor. Now, don't get me wrong, there are risks when it comes to this company. There's no guarantee it will grow, and it's a Chinese company, and that comes with its own risks. And lastly, we have Skyworks Solutions, ticker symbol SWKS, and it trades on the NASDAQ. In my opinion, Skyworks undoubtedly will be one of the best companies to own for the 5G revolution. We're looking at a market cap of just under $24 billion as well. Their dividend yields about 1.39% annually. This is also one of my biggest holdings as well. We saw lows in March of about $68, and we have doubled ever since then, but we have been trading sideways since early June. We saw a 52-week high in October of just under $160, and ever since then we've been downtrending, and I've been trying to load up shares in the 130s. We didn't go below 135, and we've gone up since then, about 5%. But if we do go back down again, closer to 130, I'll try to add some more shares. And it goes without saying, 5G is the future of wireless data. And it's not just when it comes to our wireless devices either. We're looking at artificial intelligence, emergency services, virtual reality, smart cities. Welcome to the future. And Skyworks is going to be one of those leaders. Look at that customer base. Buy the dip, buy the dip, buy the dip. And those are the stocks I'm looking to buy this December 2020. As always, make sure you do your full research before investing in any company. Otherwise, thank you very much for watching the video. Let me know in the comments below if you're looking at any of the same companies I am. As well, if you haven't already, smash that like button. It helps my videos get out there. As well, if you're new to the channel, welcome aboard. Hit that subscribe button. And I'll see you guys in the next video.